Am I overpaying for my insurance?
Paying for your insurance premiums is a long-term commitment.
So, how would I know I'm getting my money's worth?
Stay tuned and find out.
Hello guys, and welcome again to another edition of the Lifesavers video podcast. Joel here.
And I'm Aaron G.
Welcome to our show. So today we are talking about another question that is like a FAQ.
Yes, Joe.
It's a common comment. Oh, your insurance is so expensive. I am overpaying for my current insurance.
That's right.
Is there a way to reduce price? I really want to try to save money for my insurance premiums.
That's right.
So it's a common gripe, common complaint, common comment that we hear.
In times like this, where resources are scarce, Joe.
Even more, right?
Even more.
So, what we are trying to do is to actually help you to spot the signs where you might be overpaying for your life insurance.
That's right. And Joe, before we can even go into details, right? I mean, we need to at least build a context.
Of course,
Right?
of course.
Because let's be honest, right? Insurance comes in different forms, different shapes and sizes, right? Different genres of products, right? Out there.
Not all insurance are also created equal.
Exactly. So when someone says that insurance is expensive or I'm overpaying it, the issue is not just about cost. The issue is about value.
That's right.
Right? When I talk to people, most of them get these two things mixed up. Cost and value.
I see. Okay.
Right?
Okay.
So what I find out, Joe, that most of the time when the value is not clear, the cost is always high. And that's why you find out that when people go into financial difficulty, the first thing they do is they go and surrender their policy.
That's true.
Because
That's
they're not clear on what is the value proposition.
Right. So today, we're going to give you 3 indications as a spot sign for you to discover whether you are overpaying for your insurance.
Let's start with the straightforward thing, right?
Right.
Now, there are 4 genres of insurance product in the market, Joe. You have whole life, you have endowment, you have term, and you have investment-linked policies, right? These are the 4 major genres in Malaysia today. Right? Now, cut the long story short, regardless of which genre you choose, each one of them comes with 2 default accounts. They have the protection account and they have the savings account.
Okay.
So the difference between all these 4 genres is the weightage of how much protection and how much savings, right? Now let's go fast, right? For whole life, it's more of a balanced portfolio. It has 50% protection, 50% saving, right? And if someone goes for an endowment plan, it's similar to whole life, but the savings portion is 80%. So it's big on the savings, minimum on the protection.
Okay.
So it's very clear. If you're going for an endowment plan, you're going more for the savings.
Right.
And the third genre, which is the term, has a weightage of 100% protection, 0% savings, right?
Okay.
This is like your car insurance,
Right.
your travel insurance,
Right.
your personal accident insurance, right? So this comes under that category,
I see. Okay.
right?
Okay.
So nothing happens, right? Your premiums you pay burns because there's no savings at all,
Right.
right? And then, of course, the new kid in the block would be the investment-linked policies.
Yes.
Right.
That's what's commonly available, right?
Exactly, it's very famous, right? It is famous because the proportions between the protection and savings is highly customizable, right? And that's a different animal by itself, right? So suffice to say, these are the differences. So depending at what age you are, what you want to achieve, and the resources you have, different products here will give you different coverage and leverage. So we just need to understand, folks, when we talk about expensive or cheap or whatever, we need to know what product genre that you got.
Right.
Because that would be the signs to show you whether you're overpaying for your coverages.
So the first indication that we have come across is that when a client chooses a policy, they've got a very low sum assured,
Right.
but their premiums are super expensive.
Right. Okay, Joe, I think you hit the spot, yeah? I find this common between the younger ones and those who are in 30s and 40s, right? So that range, I often get this mix, right? I think the reason why is because they're paying a lot because they want more savings. Most of them go for endowment plan. Now, Joe, endowment plans are good, has a secondary or tertiary policy. Right. So if someone has a good foundation product, right, that covers you comprehensively, and then after that they have excess cash and they want to go to endowment, right, it's fine. Right. But the problem is when the first policy happens to be an endowment policy, then the subsequent policy is also an endowment policy.
Right.
So what happens?
Right. You have very little protection.
Right.
and you are paying so much.
Exactly. So in your mind that you are thinking that you are getting an insurance policy, which you are getting, right?
Mhm.
But the other hand, the reason why you're paying a lot is because of savings.
That's true. That's very true.
When something happens, you realize, oh no, I'm paying so much, but I'm getting so little.
That's right.
Yeah. But they forget that the reason why they got it in the first place was for
Savings.
Exactly.
It's imperative that you understand before you sign the application form that you ask yourself, why am I paying for this policy? What is the intention?
Right. And Joe, we spelled this out in our previous video, right?
That's right.
How do you know that you are getting a good insurance plan?
The link for our previous episode is down here. Please click it and read it and watch it for yourself and see why we mention it in extensive manner there. Now, coming back to the second point, I think, first point, we have a high premium, low sum assured or protection.
Right.
Then, there is also the high premiums policy, but they comes with very low or none benefits that is in comprehensive manner.
Okay. Now, this usually happens, right, when someone buys a life insurance, right? Let's say, just for point of argument, that comes 1 billion ringgit.
Right.
And they pay a good amount.
Okay.
Right. Now, let's pick a point. Let's say you're 30 years old. Right. Now, if you're 30 years old and someone gives you a quotation and say, look, you pay 1,000 a month for 1 million ringgit coverage. Now, Joe, in your opinion, is that a lot?
A lot.
A lot, right? Now, let's say that person is earning, I have a case, right, that they're earning 5,000 a month and this person is paying 1,000 ringgit a month for insurance.
Much.
Exactly.
Is that even necessary?
Absolutely. That's a good question, right? So you're talking about you're paying 20%, right?
Yeah.
For your insurances, right? You're not including your mortgage, your car loan, your housing loan. So long story cut short, Joe, right? I met this guy and this guy's asking me, Aaron, what do I do? I can't seem to make ends meet.
Yeah.
Right? That obviously, right? And the worst thing is, Joe, when I actually checked what are the components inside his coverage, you're paying 1,000 ringgit, you're paying a leg and a limb, right? It doesn't even have a medical insurance. It doesn't even have critical illness insurance. It's just simple death and disability. Now, for a 30-year-old guy who is single, you have a 1 million ringgit coverage, you hardly have enough debts. And why is that? Correct? So not only you're paying off the roof, but you're not getting what you really need.
That's right.
It should at least be comprehensive.
Correct. And it should be relevant to you.
Right. And this happens because they are approached more from a product pushing approach. It's not really a wholesome sit down conversation one-to-one and knowing what are your aspirations, what are your needs. It's just hit and run.
Yeah. Touch and go lah.
Touch and go.
Hey, there's a great campaign lah. It's value for money one.
Exactly.
Sounds familiar.
Yeah.
We get that calls too. We get that calls too. But the idea here is insurance, as we said in the beginning, is a long-term commitment. The payment is a long-term commitment. And insurance is supposed to be relevant to you long-term too. So if you're overpaying at a very young age already, you will definitely have cold sweats when it comes to financial challenges.
Right. And Joe, and one of the common things I've also seen, right? Let's assume genuinely you need 100,000 coverage. Let's say for whatever reason, after a discussion, it's okay, we need a calculation, 100,000 coverage, right?
Right.
But what I see, there is a mismatch of the wrong insurance general. Remember whole life, endowment, term, investment link, right? Now, this is where the issue of overpaying comes in.
Okay.
Right? Let's say, Joe, I come to you and say, I want 100,000 coverage, right? So I don't want all the fancy stuff. I just want coverage and maybe a bit of savings, right?
Okay.
So now you can choose whole life, you can choose term, or you can choose investment in policy, right?
Okay.
But most of the time, endowment is given.
Yeah, I've heard that so many times.
Exactly. Now, I'm not against endowment, guys, right? But when someone gives you wants coverage, and when you give the endowment policy, would it cover? Absolutely, it would cover, right? But because the weightage of savings is super high in endowment, you end up paying double the premium.
Of course.
Right? Now, if your intention is I just want coverage, whole life will do, term will do,
of course,
right? Investment will do. But endowment, so what I'm trying to say is that depending on the genre of product you choose to see whether the cost efficiency or even relevancy comes into the picture. That's why after some time, just quoting the guy who's paying 1,000 a month, he will feel the pinch.
That's right. In short, guys, if you're a young graduate, the basic thing that you probably need is protection and medical insurance.
That's right.
If you want to take on a savings insurance, it should come only right after you've got your protection and your medical insurance in place.
Absolutely right.
So you have to ask yourself, why am I being tempted to go into savings more than a protection policy? So if you have any questions on any clarifications, please leave a comment and DM us. We will be very happy to clarify this matter with you further.
That's right.
Right. Now, I hope you're getting value from this video. And if you do, please, commercial time, hit the like button and hit the subscribe button. Yeah. End of commercial. Okay, guys, we've heard all the factors mentioned by Aaron and I just now. Now, this is not the end of the show. We are here to also provide a solution. Now, there is a solution at site. Now, if you have all these indications in your policies, then I think, policy review is definitely overdue.
That's right, Joe. That's right. Because what policy review does is it will reduce the possibility of you overpaying.
That's right. And when we do a policy review, we really do a policy review. And we have an episode made on that. You can, the link is down there and you can actually click the link and see it later. When we do policy review, and as Aaron mentioned about reducing the overpayment, we are talking about restructuring, aren't we?
Yes. Because you see, Joe, when we do a policy review, right, we look into all other aspects, right? We will find out exactly what you really want to do, right? Revisit the reasons or your priorities, your concerns, your aspirations, right? So we take you to a process, right? And this process is about putting you in the driver's seat, right? And making sure that you drive or you drive your goals, right? And we are only co-drivers,
right?
So when we put a pin into all of these factors, then we know what you want. You know what you want, right? So you know how to put your resources at the right place at the right time. So if there are policies which are redundant, right? Or there are policies that you're overpaying, or it's the wrong genre, you're able to restructure, or we call it reallocate, right? To the right product genres that will maximize your coverage for a lower cost.
So spot on. Actually, even just spelling out the entire restructuring process. Because friends, let's be very honest. I think some of us, when we actually do a review with our existing agent, we only get an Excel sheet and, there's no restructuring or solution provided.
That's right.
But, with GE Lifesavers, we do here is to aim to enhance, educate, and empower you about taking control of your life policies and making sure that you and your loved ones are adequately protected with the max value of money. This is what we aim to do for you. And thank you so much for tuning in to our show today. This is Joe Raj.
And I'm Aaron G.
Take care. Have a great week. God bless. Bye.
Bye.